I use AI for a lot of my investing work. It screens ideas, it summarizes reports, it helps me think in scenarios. But there is one decision that I will never outsource. Not to AI, not to an algorithm, not even to an advisor. And if you care about long-term investing, you should draw your own line too. The biggest risk with investing isn't that it picks the wrong stocks. The real risk is more subtle. It's that AI can change your behavior. And behavior is where I see most portfolios fail. Let me start with what I do outsource. I let AI help with tasks that are computationally heavy but emotionally light. For example, I'll let it screen thousands of stocks, I'll let it summarize earning calls, extract themes from filings, and I'll let it run scenario risks. That kind of work is great for AI. It's pattern compression, it's information reduction, and it helps me to see a lot more things faster. So it's not that I'm anti-AI. I am, of course, very pro-AI, but you have to use it within the right context and the right role. Here's the problem. Investing is not just analysis, it's behavior under uncertainty. And behavioral economics has shown for decades that humans don't make decisions like spreadsheets. As humans, we have loss aversion. We feel losses more intensely than we feel gains. We anchor on the purchase price. We overweight on small probabilities and we panic at the wrong moment. This is the core idea behind prospect theory. AI doesn't magically remove this. It can actually amplify it. So what's the decision I keep human? For me, it's this. I do not let AI decide my exits. When to sell, when to cut, and when to fully step away from a position. AI can tell me what's statistically optimal and it can show me different distributions, different probable outcomes, but it can never ever feel my regret. It cannot feel my sleep at night threshold, and it definitely doesn't feel what drawdowns does to my nervous system. And that's the most important thing because exits out of positions are not technical. Exits are identity decisions. Exits encode our values, our risk tolerance, our time horizon, and our emotional stability. While AI can calculate the risk, it can never carry it for us. If AI controls your exits out of positions, it effectively controls your relationship with the market. Now, a reasonable question would be, can we encode our preference then into AI? Can we not just program the rules? Well, yes, we can. We can encode simplified rules into the algorithms, but behavioral research shows something much deeper. Our preferences as humans are not stable. They are context dependent. Your risk tolerance as an investor changes based on framing, emotion, fatigue, and general life events. AI systems in investing, especially trained on human data, very often inherit human patterns. So in many tasks, more advanced models become more human-like in their decision-making, especially in preference-based decisions. So AI isn't necessarily neutral. It can learn the same mistakes that we make. And here's the bigger issue. AI is optimized for measurable objectives, whether that be clicks, engagement, conversions, or just general activity on a platform. And those objectives are not the same as general long-term welfare or compounding. To help you understand this, let me give you an analogy. Casinos and mobile games are known to use behavioral science to keep people engaged. They use rewards, near misses, variable reinforcement. Now, imagine that same logic inside a trading app or a finance app or a smart investing chatbot assistant. If the system is optimized for your engagement, it will end up nudging you towards activity. That might result in more frequent checking, more tweaks to your portfolio, more helpful alerts, even maybe more reasons to trade. And we know that trading more can end up hurting your returns. So this is why I'm very cautious when it comes to AI in investing. Not because AI is bad, because incentives around the AI system matters. Here's the framework that I use for my AI investing. Humans set the guardrails. Then AI has to operate inside of them. The guardrails are things like my time horizon, my maximum position size in a particular stock or sector or geography, my maximum drawdown tolerance, my liquidity needs within the portfolio, and maybe my broader wealth setup. These are not optimization problems. These are value decisions. And once these are set, AI can help you stay inside those lanes. It can help you to evaluate different investment ideas, explore different outcomes or scenarios, or it can even help you summarize a lot of information. But it should never get to rewrite the investment philosophy. And it definitely does not decide my exits out of positions, because that's the exact moment where behavior and identity as an investor collide. Here's a simple exercise. Pick one decision in your portfolio that you believe cannot be delegated, and that one decision stays human only. For example, in my case, exits, but other options include maximum position size, leverage that you're willing to take in your portfolio, whether you pause your strategy, whether or not you liquidate during volatility. Write it down as a single sentence in a place where you can see it, and then build your system around that, because AI is most powerful when it amplifies a clear human point of view, never when it replaces one. AI can help you think wider and dream bigger as an investor. It can help you see more opportunities. It can reduce your workload, but it can't decide what matters to you. When I was very young, a mentor told me, if you stand for anything, you will fall for everything. And I can't help thinking about that saying when it comes to AI nowadays. I always chuckle when people say, AI always changes its mind. And I just think to myself, well, yeah, because it's trying to guess your values and your principles. Use AI as a tool, not a compass, and keep at least one core decision fully in your control. If you want, comment below what is your one non-negotiable decision, and I'll see you in the next video.